Yo, this is your boy Wilson. Welcome to today's session. I'm looking at Nasdaq 100.
Awesome!
Now, I want to explain something. Yesterday, what happened? The market was selling yesterday, of course, but towards closing, we closed around this area. That's our closing of yesterday's session. And when the market opened at 12, immediately my eyes were drawn to this imbalance. And yeah, that was a good one that one could have taken because this imbalance was supposed to be filled. If I can stretch this to the other side, then you can already see it very beautiful. It's not random. The algorithm is programmed to respect those things. These things are just like the soft limiters. They just limit the market. Like the market can never pass those areas. If if it was programmed that price should price to the fair value gap, which was left before the market closes, it will stay there. Nothing will happen. That can be your confluence and your confidence in that way that the market is most likely not interested to spill up, basically. So it's locked up. So this is the lock area where the market is locked overnight. And this locking, you can already see that it's so choppy. People call this choppy. Some they call it this is accumulation. They're accumulating. What are they accumulating? They're accumulating positions, right? So, and some will use that, okay, this is an inventory that is being created overnight. And some will tell you that this is liquidity engineering, the engineering liquidity here. And you can already see that the Asia high, which came in here around 3 o'clock and here around 4:35, and then it was all intact. All these two highs were all intact till 10 o'clock this morning. So you can see they never touched or engaged with all people that are here active selling. So, and what was happening is that we opened and then immediately we ran up. And now the market stayed up, stayed up and stayed up, but still showing no strength to go up, no strength to go down. But eventually 10 o'clock came because we have London, which came 9:35 here. So you can see here, London was equaling here. So this is relatively equal lows, which are always suspects to be ran off, to be attacked on a later period. So you can see double bottom there, and then the market comes back to where the fair value gap that was created before closing. So now after that, the market now starts spilling all the beans. But now my eyes again were then opened to go to regular trading hours to see that what can I have, what is there that it can limit the market from continuing to fall down, because I mean, once they left this, they were going for this liquidity that was here. This is the Asia low, which was the open, right? So this is the Asia opening low. So we have the high here, we have the low here, and then we have the high here, which is still intact because London failed to engage with this high. So basically, what the market did, it came to fill this gap here. These two lines here, they represent what we call an opening range gap. This gap was made a few weeks ago. I should have annotated here which date precisely. So the market was running towards this gap in itself while also taking the Asia low, engaging with this low. So once this happened, you can see here, this is a fake out. It's a fake out because immediately when this was printing, I was of the mind that I need to sell this. This needs to be sold, or rather, let me sell within this opening range gap. But immediately you can see I saw them coming back in, breaking in strongly, inside there, like really breaking in. And then immediately my attention is caught to this area here, above here, because here is relatively equal highs, and they are always what? Suspects. So right now, we have like three confluences that I'm looking at, you know. So we have this opening range gap that was created a few weeks ago, and we also have a fair value gap that is here, and we also have this order block. So my guess right now is that the market will do something like come back down here a bit, come and stay here a bit, you know, and then we start attacking. We are going to start attacking, you know, because that's how the market moves. It always attacks. There's liquidity that needs to be attacked, or rather, you call them lows. They need to be manipulated or swept. So from here, to me, it looks beautiful. If you see this as an inverse head and shoulder like pattern, you know, because the market can show everyone whatsoever that they want to see. So I can already see by this drawing, by just making this drawing, I can see an head and shoulder, an inverse head and shoulder, you know, because here we have the imbalance, we have this order block, and we have this opening range gap. So yeah, what the market is trying to do right now, it's going to try to price to fill this run that they just completed. So they're taking a break, you can say that. And now what is most likely to happen is that the market will just come and fill this and run up to attack this overnight engineered liquidity. But for now, also, this has all the right to fail, because I mean, this is the imbalance which was left open. You know, they left it on purpose, thinking, yeah, they are coming back at 11:30 to fill this imbalance, which they took the whole hour, you know, and then 12:15 they start going back down to fill, let's hope, the imbalances of this run. So now, if the market comes here and does what I'm expecting it to do, then I will just get in without any fear, and I will just go booyaka. That's how I'm gonna do it. Or it's going to do this to me. Yeah, that's what the market does, yeah. So, but peace out. This is me signing off. This is your boy. Balance that I was talking about into this opening range gap of the past week, and now I spoke about this overnight engineered liquidity. Look, the market is reaching for it now. They're just gonna grab everyone that is active here. Everyone that was selling overnight, it's your time to get out. We are coming for you like this. So this is how it's going. You see, yesterday's low got taken out during London's time. Open London around this area, leaving this liquidity intact and running this low to couple it with the opening range of the previous week. And now we see the market feeling this imbalance and then
Order filled.
oh no, I'm out. So the target is done, basically. Trading is done.